Yeah, Wednesday. What's up, everybody? Wednesday morning. Hope you guys are all having a great day. Welcome to today's edition of the DMC. I'm your host, Chuck Fulkerson. We're going to do what we do and take a look at our four major markets for today, looking for potential trade opportunities that we can use for some trading ideas. S&P this morning is up 1.5% or 1.2%. Nasdaq's almost up 1.4%. So seeing some bullishness this morning. Question is that a short covering rally that we need to pay attention to? So before we dive into it real quick, I want to make sure everybody is aware. We actually have extended our Black Friday, Cyber Monday deal at tradersarmy.com. So 60% off through everything now through December 1st. So if you're interested in becoming a member, or maybe you're interested in learning more about some of our online courses, we've got courses in options, futures, tactical reinforcements, tactical crypto trader, which we just announced, a strategic trader class. So we've got a lot of really great things for you at tradersarmy.com. Today is the last day, so go ahead and learn more. And by the way, if you want a special one-on-one strategy session, click this button here to schedule your one-on-one strategy session with one of our member development specialists who can help you decide which makes the most sense for you. All right. Let's go ahead and dive in. So the S&P, we're up about 60 points this morning. Now, this was the level that we looked at yesterday and said that if we're going to get a bounce, this would be the place where we would get the bounce from. And the reason that we liked this area for a bounce is because on a daily chart, this was the spot where old resistance acts as new support, right? We bounced down right into this support level, and we're starting to get a little rally up out of that level. Now, we looked at it for an intraday trade opportunity, looking for a 2-to-1 reward to risk, and then taking our stop and moving it to break even. And certainly, we have achieved greater than that 2-to-1 status. So, if you were in our strategic trader live trade room yesterday, hopefully you were able to catch this as a tradable idea. So now we've used it up. I've got to remove it. Your stop at this point should be, you should have taken some money off the table, move your stop to break even. Because when I look at this on the 4-hour trend, that is simply a retracement back up. We're still in a downtrend overall. So we've rallied up a little bit, but we've rallied up in the Globex session. I think from a daily standpoint, I wouldn't be surprised to see us come down even a little further from here. Now, I also wouldn't be surprised to see us bounce, but so if you're in that long, you stay in that long until we reach one of these levels of supply up here, up above, and that's where we've bounced off of and starting to rally up. And so this supply area up here, this 4652 by 4660 is a really nice area of supply that is going to be still valid for a day trader because as a 4-hour trend, that's still going to keep us in our downtrend. Now, if that level breaks and then we get a higher high, then we've clearly put in a new bottom. And we would anticipate price rising higher from there. So one of the things that we looked at yesterday was relative strength to the market. And so, we're going to see some of those relative strength stocks that we had talked about yesterday continue to rise, while some of the weaker ones may fall if we do indeed get this rollover. The Nasdaq, we had looked at the Nasdaq breaking out of this triangle, which it did, came into this area of supply. Now, unfortunately, it poked just a little bit above what I thought was a really clean supply area. So that was actually a small stop out before then the huge move down to the area of demand and then rallying back up. So there were definitely some good trade opportunities yesterday, although unfortunately this one was a small stop out because it did get above the pivot by quite literally a tick. There's nothing like getting dicked by a tick to really frustrate the crap out of me. But that's okay. Husa. Stay calm. One of the things I would take a look at today is, do we get some basing right below here for a potential breakout for price to continue to run out of this level? Because if it does, then I think you've got a lot of clean air up above us. So looking into the future, if I'm looking for a long, I think the Nasdaq might actually be better on the breakout above here. The S&P looking really good on a short up in this region. When we look at the Russell, we had spoken a little bit yesterday about the Russell being overextended. It also hit our area of demand that was our confirmation long and got a really, really clean bounce up from that confirmation long. And we're sitting right now in the opposing supply area, giving us a potential entry for a short But we're not getting a strong reaction. If you took this short, we're already 4 candles into the move and have not gotten a strong reaction out of that level. Chances are that's also going to break. So I got to remove both of those levels in the Russell. If I'm looking for the next quality supply in the Russell, it's not until way up here. So we could gain a little bit of strength in that Russell, as we are seeing, but our 4-hour trend does still continue to be down, but basing and then a pop higher can pull us out of that. In the meantime, if this supply area does indeed hold and we continue to roll over, look for a basing right around 2220 for a drop. Looking at crude oil yesterday, as we got a little rally off of crude. Unfortunately, our breakdown level worked out pretty well all the way down to our opposing area of demand, and then just missed entry on what was a pretty clean demand area. Just missed it. So that'd have to be a confirmation entry anyhow, just simply because of where we're located. But we are coming into what is a pretty quality area of supply. This little drop area right here. Now, I don't love the basing we're getting in front of the level. Remember, basing before the level is the KOD, kiss of death. And so you might want to switch this to a confirmation entry just for that reason, that we are basing in front of the level. But I do still think there could be a reversal at that zone. Gold starting to look a bit better, bounced off of our confirmation long entry, not a strong move out of that confirmation long. So at this point, I'm going to remove that level. When I look at this on the 4-hour, our 4-hour is very sideways. And so your next best move is the 1764. Not a lot of great supply up above us. If I move to, say, the 15-minute chart, I don't even have anything really clean on the whole move down. It just was a straight down move when the Fed came out and said, well, we're going to see what happens with this Omicron variant. It's probably going to slow down our recovery. That was really the reaction to that announcement. And so a news-driven reaction tend to get retraced. So I wouldn't be surprised to see us rally up throughout the day today to get back near the top of that range. But overall, the levels I'm going to look for today, when I'm looking at the S&P, I really do like still the S&P to continue its short-term trend, which is the 4-hour downtrend. If we're going to look bullish, I think the Nasdaq would give us the better entry on a 1-hour breakout trade. Gold has a reversal that we're coming up into. So just because we've rallied up this morning doesn't mean we've changed our overall trend direction. Utilizing the 4-hour, make sure that the 4-hour does give us our trend direction. For our stock of the day, let's go ahead and take a look at a potential bearish opportunity if the markets continue to come down, and it's really a reaction to a strong gap play, and it is Autodesk. So looking at ADSK, we had a very strong gap down on earnings, and there's really been an inability to fill said gap. There's really been no ability to fill this gap since price came down, and with the inability to fill the gap, what it does for me is it sets up a potential for a breakdown below this region. Now, this morning, we're going to gap up a little bit, 255.66 by 256.90 is where we're trading in the pre-market. But I think that on the hourly chart, if we get a breakdown below 252.10, you may get a little bit of a move down. If I throw on our Traders Army implied volatility study, you see that we are still, let me put on the daily chart because that doesn't apply on the hourly. We're still very, very high in the implied volatility range. And so we do anticipate that the implied volatility would come down a little bit after earnings, as we had a strong rally of implied volatility into earnings. And we would anticipate volatility would come down. So it may not be a bad idea to look to sell a bear call spread higher than current price. So selling a bear call spread could net you a decent credit for price to stay below a certain level and for price to continue to drop. So the bear call spread is certainly a way that you can go when trading Autodesk. So hopefully that's a trade idea that you can take advantage of today. If you guys have any questions, as always, send us an email, support@tradersarmy.com. I appreciate you joining us. Until tomorrow, everybody, I will talk to you soon. See ya.
Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.